Traders, what's going on? Jamie Saettele here. It is May 30th, 1 day away or 1.5 days away, I guess, from June. Tomorrow's the last day of the month. Anyway, let me know that you can hear me. Jorge Rodriguez says yes. Okay, great. It's good, says Peter. All right, we're going to start out. Simple update on the US dollar index. Nothing has changed here. Chris, what's going on? I'm good. How are you? Nothing's changed here, folks. Dollar eked out another high, and we are essentially now, after today's drop, we are unchanged for the most part over the last couple of weeks. It's been a grind up here in resistance. Obviously, if we look at, say, DXY, it looks a little bit different because that's euro for the most part, and euro's been the weak link. But when looking at, general dollar direction, not just euro, right? My opinion has not changed, and that is, the opinion that the dollar's at resistance and that it's at risk of turning lower. Okay, so we have that right now. US dollar again, pulling off a little bit here today, erasing yesterday's rally, post-holiday US UK holiday rally, or whatever you want to call it, Italian crisis rally, again, whatever you want to call it, risk off, etc., etc. After, given all of that, at the end of the day, we have the dollar at resistance, and therefore we have the risk of the dollar turning lower. All right, so like I said, if we look at DXY, this is a weekly chart actually. So you get this quick spike up above. That I was not thinking would happen, right? I was thinking that we would hold just kind of like the US dollar index is doing, but DXY did not cooperate, of course, with euro being the disaster there. And again, it is turning down now. So, let's say after this week is complete, we're ending up down here, then you're going to kind of be able to call this just a false break, right? We're going to say that was just a false move to the upside during what I would kind of consider illiquid conditions as well, being, just after the US holiday. So that is kind of what we're in limbo here with DXY. Next level, by the way, would be up around the 156-week average, 3-year average, which is all the way up around 95.60 or so. I'm, again, not sure we get there. And frankly, I don't really care if we do. I'm looking for the dollar to roll over. So that's my story. I'm sticking to it. Euro. It's hanging on hanging on for dear life, I guess you could say. So this is the chart from back in, I don't know if it was the update. I guess it was the update from the other day, from 2 days ago. But this is simply this is the daily chart, but remember the weekly chart we had. This is the 25 line of the entire channel back to 2008 and the magenta line. So, I'd say that actually held. You can see that actually held perfectly on a closing basis. And obviously today's gain wiping out yesterday's losses, excuse me. So that's a good sign for, the potential for a base down here. You do have the trend line from the 2017 lows more or less holding as well. So there is still, I hope, possibility, whatever you want to call it, that this works out for euro from here. right? Now, one thing that we would want to consider, because what's the narrative right now? Narratives change, but what's the current narrative with what's happening to the euro and in Europe and all that? It is obviously Italy, right? And to specifically Italy, but in a general extent, you could say it's Italy, it's European peripheral, peripheral countries. You got like Spain, this is the Italian stock market, by the way. You can see the Italian stock market actually very close to support on this chart. And then this is Spain, and Spain log chart. I guess you could say Spain's actually gone through, excuse me, Spain's gone through its support. I'm more focused on Italy, of course, so that's Italy, EWI, as is the rest of the world. But Italy on log looks like this. So depending on if we're looking at log or arithmetic support, you could say may have actually been hit. I'd say this is probably close enough. And if you do get one more panic move to the downside, then you'd be looking for a low down here around 2760 in EWI, which is the iShares Italian ETF, right? EWFN, which is the financial ETF, I've adjusted the slope a little bit so it better fits the angles a bit better. This one actually looks like you have a little bit more downside, right? This would be arithmetic and this would be log. This is going to correlate much more closely with euro yen. Okay. So euro yen, you can see if we are looking at it from this manner, you would say that just go from this top here on 419, you're getting yourself kind of a 1, right? A 2, panic 3 drop, culminating in yesterday's move, right down into the June 2017 low, so just about a year ago. And if we get a bounce here, would I expect a bounce because this would be a small fourth wave? And then you're going to puke out again one more time, probably somewhere down here. So, think about this one more with euro yen, in terms of how you trade it, right? Or the best way to trade it. European financials, this is going to include like your Deutsche Bank and stuff, right? Which is obviously in the news a whole lot. Talking about their problems and everything and how they're going to be Lehman 2.0 or whatever. But yeah, either way, still some upside from here. So that's an important point, right? We're still looking for a little bit of a bounce here in a fourth wave. So if we want to take a 38.2 of this, yep, all right. So you're talking 22. It's a pretty good size move. We're currently up 50 cents, another 50 cents, gets you basically another 1.7%. And that would be where I'd look for resistance in EUFN, European Financials Sector Index. So this is like the XLF of Europe, I guess. That's where I would be focusing attention if I were looking at maybe a market to help me understand how much upside euro and or euro yen might have from here. Okay, so moving on. Why don't we actually look at euro yen, since we just looked at that EUFN chart, and then we can go to then we can zoom in and look at euro a little bit more as well. So here's the euro yen chart. Okay, it's a daily chart, and we actually yesterday we did hit the lower channel line of this whole thing. So if I were to zoom into a 4-hour chart, you can see that initial resistance actually has been hit from the 75 line. I would say that the best course of action here is to allow for some consolidation upside probably up towards 128.15, 128.20 before I'd look for more downside. And that is very much in line with what we just looked at on EUFN, the European Financial Sector ETF, right? So a little more upside here, and you get basically, you get the median line at that point as resistance, which is clearly a major spot. It was support and then resistance before, things really fell apart here, started falling apart. That started on the 28th, which would have been holiday here in the US, and then obviously culminated in yesterday's move to kind of panic lows, or panic drop, if you will. So yeah, for me, 28.15, 28.20 is a level in euro yen that I think would be worth keeping in mind for one more sell or short position. And as far as eventual downside is concerned, we're probably talking about, it could be, you could come under this line a little bit. You do have 50% of the move up around 23.56, but I'd be looking for more like, I'd probably be looking for more like price to take out this low back here. That's the June 2017 low right here. Okay, it's also pretty close to where you opened 2017. I'd be looking for that to get taken out, and that's going to be closer to 22, mid 122s. For now, of course, focus on the 128, 15, 20 area for resistance, okay? And that is euro yen. Now, if we zoom into the euro dollar chart, right, thinking that we have a little more of a bounce in the cards here, let's see, let's go to 4 hour. Interestingly enough, on this way down, you actually did not have any big high volume capitulation type levels. And a lot of times, as you know, I use those for, kind of reference points and levels to help me maybe enter a market for a trade from a turn. We don't have any of that right here. I do think it's worth looking for entry on the long side, given the very long-term levels that we have held, albeit barely, and we did not hold on an intraday basis. Right, the markets spiked lower on an intraday basis, but did close above some of those long-term parallels that we wanted to see hold. But for me, yeah, the 1564 is a square root level. That's a level I would know. We're looking at the 4 hour chart here. There's a trick, of course, that I like to use when attempting to trade a turn, and that is simply, watch the 24-hour average. That's this average in black right here. Okay, so if we can get that level, to provide some support, then you simply have a very short-term indicator telling you that that short-term time frame has changed a bit, right? So that's something to keep in mind. Remember, on the way down, we actually did something similar. We actually shorted right up into that 24-hour average. I believe it was right here, and of course ended up getting out of that trade way too early. But look for something similar here on the opposite side. Watch for that 24-hour average to provide some support. So you might be looking at the 1560s to 1590s for support in euro. And I do believe that you're going to get upside for euro if it pans out. First level you're going to want to pay attention to is probably going to be about 1780. Okay, that's a square root level as well. You also have the half extension of the of the prior channel level down there. Now there is another fork that we can draw. I still don't have it in here, but I'm aware of it, and that would be this one. So you can draw your regular fork right here, right? This is the steep one, and if I zoom into it on a 4-hour basis, you can see that there are some decent inflection points around the the median line here, and then where we are trading on right now, it's actually the 75 line. So again, this is not something that I am necessarily trading off of, but I would say that it might be worth, if, let's put it this way, if euro does not start responding to these levels better, then it's something that I'll draw in and look to work off of. But for now, just pay attention to 1564.94 support and looking top side to about 1780 before it reassess at that point. Okay, dollar yen. This is last night's chart. Did come in, did hold a spot here. We are easing our way back up to the underside of the median line and the parallel just above it, just to get a little more precise. And that zone in between there, right, is where you're going to want to see resistance if, again, the the swing move is still lower, right? Now, remember we talked about the sliding parallel technique here on dollar yen. Did work out pretty well in so far as identifying resistance here on Sunday evening in the US, Monday trading overseas, but I'd still continue to follow this, right? That line should be watched for resistance. There's no reason why we should not follow that level for resistance. And again, you've got the 200 period average on the 4-hour chart there as well, right under there. So big spot, I do believe, for dollar yen is that 109.20 area. And I am looking down towards simply the lower parallel of this structure that, goes back to February. This could be an area down here where it's really worth actually buying it, for, a strong bounce, right? It's stronger than this bounce, that's for sure. So as it is now, I'll continue to just move the target up on that dollar yen short position to the lower parallel. So as we go forward each day, your target's probably going to move up a little bit, so that we don't have a situation where we hit the parallel but we don't get out. And also, what we'll want to be seeing here is for price to roll over, right, from this resistance area. That's important, because if we just go through it, then maybe the situation here has changed, right? And then we're not going to want to be sticking with the short position anymore. The reason I have not simply trailed the stop down even more is the fact that you can get spikes, and I don't want to get spiked out of a position where you feel like a strong holder. And also, we should have the opportunity to move the stop much more once we do roll over here. So, if we can come into 109.20.40, roll over, get down towards this area at 108.50, then we'll move the stop to whatever high we have in place over here and target that 107 plus area, right? So dollar yen, no change there in so far as what was written about last night. It's a good segue, of course, to look at the Nikkei, and probably the market or major index, I should say, that I'm following the closest at this point, right? We've got the ABC that we talked about, we've been talking about for a long time. Here is the 4-hour chart. as it is now, you've got 22,230 for resistance. We're looking for, or I'm looking for that to, hold as resistance, and I'm looking for downside towards, as mentioned, that 21,000 or so level. So, I mentioned that yesterday I didn't have the fib on there, but 20,966 is also the 1618 extension of this drop. So if this is a 1, 2, right, then this will be 1, 2, then you keep going 3, 4, 5, all that stuff. So that's simply where I'd be. That's the biggest spot to me. And that's a quite a ways away, right? You're talking, from here, it's over 1,000 Nikkei points. Of course, we know that this market can move awfully quick. Leon says lower Nikkei correlates with still lower in dollar yen. Probably, right? We don't know for sure. The relationship goes in and out as far as, so we've seen periods where the Nikkei's gone up and dollar yen's gone down, and we've seen opposite periods. But for the most part, yeah, I would think that in this current environment that you do see lower dollar yen and lower Nikkei together, or higher dollar yen and higher Nikkei together. In other words, I would think that they move together in the current environment. But yeah, as it is now, again, 22,230, probably your level to pay attention to the most. And it's not a make or break level for me like dollar yen 109.2040 is, but it is where I'd like to see resistance in order to roll back over to the downside. If I scroll out to the daily chart, you can see too, simply the most important thing to pay attention to are the parallels from the 2009, 2012 lows. And that parallel here, right, is going to put you down near that mentioned 20, call it 21,000 area in the Nikkei. So, we're kind of looking to trade from parallel to parallel, so to speak. Okay, so that's our deal with dollar yen. Moving to the British pound, not a whole lot of clarity here for me at the moment. I don't think really this is something worth paying much attention to at the moment. There's better places to play, right? Better sandboxes to play in at the moment. All I will add, or all I will note, is that the 2017 trend line is kind of your last level of any sort of defense on any sort of bullish outlook or call or whatever, and that's going to be down, that's below 3150 at this point. That's going to be like 3110, 3120 at this point. Okay, and I would also add that 3450 is probably your spot. 3450.60 is your spot for resistance at this point. So that's the low here from January, and then you can see that you had some spikes on that around, this was BOE a couple weeks ago, before you finally broke down here in cable even further. So, call it 3120 to 3450. Those are kind of the two spots that I would say are worth, maybe worth knowing for possible inflection points in British pounds. Other than that, I don't have much interest in trading the British pound at this point. Okay, moving to commodity currencies, we have somehow barely survived the New Zealand dollar. Missed the stop by less than 2 pips, I believe, yesterday. And sometimes that happens, right? Sometimes it's the other way, right? A lot of times it's the other way around, right? A lot of times you get stopped out and by a pip, and then the market moves in your favor, or dollar Swiss, right? Stops us out quickly and then goes down. Although in that case, it would have missed the target by 1 pip anyway, but you get the idea. So no change here in terms of me saying that you've come from very long-term support. Remember, we have the full channel extension on the British pound, and it hit it. I mean, it hit it exactly, the low, and that was on the 16th of May. You've got your half channel extension, which we have seen as support and resistance throughout this month, right? Late April and then throughout May. And now with today's move, we're trying to break through it, which is a good sign. And most importantly, you have the really long-term parallel, which is this magenta line, right? You can see here, which was, again, just about perfect in terms of finding some some support. So from here, we've got a possible bullish fork to deal with. I have it grayed out here, but it's something to pay attention to. Anticipate that if we finish the day up here, maybe try to move the stop a little bit. I don't want to move it too early and get stopped out, before it resumes in our favor. But I think in this case, it'll probably be best to move it because we will have broken through that half channel extension. So really the next levels that we're looking at on the upside, if we can follow this fork, we could be getting, up towards the highs from May, which is 70.50, right? And then eventually maybe the yearly open. But as it is now, I think we should probably just follow the fork, the bullish fork here, or the corrective channel. So, if we come off of this at 70, then, we'd be wanting to tighten the stop. If we can blow through it, then we'd be looking for the extension. Either way, you're kind of seeing, this is for me, you're kind of seeing a work in progress here, right? And how I look at kind of a move as it develops. But as it is now, you do have a low, a high, and a low. So you've got, this is a change in behavior, right? Do have the potential for us to move a good deal higher into tomorrow, get up to that 70-60 area before pausing and pulling back and then wanting to get bullish yet again. By the way, the seasonals in the Nikkei and whatnot, we're getting into a good period. June's historically a pretty bad month for the dollar. So, we are getting into the period where we would want to be bullish. Things like Kiwi, Euro, Aussie maybe. I mean, I like Kiwi better than Aussie. We're seeing that today, the outperformance. But let's go to the Australian dollar here. So Aussie is coming right into resistance that was noted in yesterday's post. It's basically 70-60s. We are pretty much there, right? Weekly open 75.60. Parallel 75.70, 400 or 200 period average on the 4-hour chart 75.73. So we've got a lot up here that could inspire for a pullback. I know I said yesterday in the watch list that we'd be looking at maybe selling Aussie up here. I don't know. It feels kind of wrong. After having the dollar at resistance, and then US dollar really did not go that much through resistance, right? I mean, we had that 12,000 level kind of pinged for a good while, and then we went up into it, and we pulled back from it. We went through it, but now we're back back into it again. We're back below it. You can see right here, 11,980 is where it is. So to me, that suggests that we actually be, air towards the dollar weakness side, which obviously short Aussie would not be that side. It'd be the opposite side. So I don't know. It's just not for me, right? I do think that the risk is lower dollar. After what I can call kind of a mini false breakout in US dollar on the upside and not reversing it again today. So, you can watch it. You can see if you get a big reaction 4-hour reversal or something here, maybe think about it, but maybe just sit tight too. I mean, if we look at the daily chart, you don't have to do anything, right? There's always people think they have to do something. You don't have to do anything. We still have some decent positions on at this point, so let them work. Here is the Aussie, though. You can see that it is putting in a bullish outside day, just as Kiwi is doing. Kiwi's is much more impressive. And you could still end up getting towards that 2016 trend line. That might be the real spot, right? This is the Jan-April trend line. And then that 2016 trend line underside, that might be really where we want to be paying attention to. If we also look at the volume levels here, you can see that Aussie is going through a high volume level. That's the high volume level from 522. What was 522? It was during Asia, so I'm not sure. Was that RBA maybe? Not positive. But we're going through that level as well. So, gives reason enough if you're looking for one, I guess, to say, you know what, maybe it's not worth fading this move here. Maybe that pullback in Aussie yesterday, that dollar rally was just kind of BS. Maybe that was a bit of a fake out, right? So that is what I'm looking at with the Australian dollar at the moment. Essentially, just looking. I'm just kind of sitting here. I'm just watching. I'm observing until you see something better. I don't want to get into a position just because I wrote about it. Getting euro popping off here a little bit as we go into the European close. We just saw it. You can see. Look at that. Look at that. That's nice. Look at that rip. All right. Dollar CAD. Same old right here. We're looking at 2012 trend line in magenta and the 2016 17 trend line in black, and essentially we're trading between them. I guess technically this was not really hit. I said today on Twitter, if we got a quick spike on the upside, then I would watch for resistance at 30.76 because that's daily reversal resistance. It's the high day close right here, and we didn't get it, and dollar CAD has wiped it all out. So from here, now the fact that we've kind of turned off of this trend line or close enough to it, I'd be looking to sell a bounce, really. If we go to the 240-minute chart, the 4-hour chart on this, you've got, and if I make the square root levels a little bit more visible, you can see that 2910 area, right? See that square root level at 2910? Lots of spikes up through it. That would be an area that I would use for, for a short, right? I'd use that to enter a short position. So look at 2910. You've got month open in the 200 period average on the 4-hour chart just below price. But now that we've got, the turn lower from the, back to the daily chart, the turn lower from the average, excuse me, turn lower from the average here, or not the average, from the 2016-17 trend line, a short up into 2910 or so, you're going to have 2770 again. That's the 2012 trend line, but I have a hard time believing that can hold, especially as we enter in, as mentioned, the seasonally bearish part for the dollar, especially against things like CAD and Aussie. So that gets us 2770 maybe for a first test of the move from the 2016-17 trend line, and then eventually looking for more downside. So I do expect to be putting in a dollar CAD short here, you know, probably today, probably after today's session, probably in today's post. I will be looking at entering that dollar CAD short position. Okay. All right, let's move on to some other commodities. Things are not, I would say things are not necessarily all, a way to put it, making a whole lot of sense is the way to put it, I guess. Hold on here. And you'll see what I mean by this when I say making a whole lot of sense. So if I go to copper, all right, copper actually topped in December, funny enough. And look, we're at support. This is today's candle. This thing is teetering on the edge, more so than euro, by the way. It's simply, wanting to break, it seems like, every time it comes into this trend line, but it holds. I mean, it did break once back in March, and it was a false break. But copper, yeah, it's something that worries me about potential upside on the Australian dollar, although maybe it shouldn't because the two haven't really moved a whole lot in recent years all that closely together, except for very short periods of time. But generally speaking, I do find it difficult to believe that you're going to have a sustained Australian dollar bull market if you have copper going straight down, or maybe copper doesn't have to go straight up. Maybe it can go sideways or just hold up or consolidate. I actually think that's what's going to happen with oil here and oil equities. I think that you'll see energy equities actually do okay, and I think you'll have crude oil consolidate, and even go lower. But yeah, this is just something to keep an eye on. I don't have like a forecast here, right? I'm not trying to predict a break. I'm just saying be aware of it because we are on a big, big level. And if it does break, that could usher in a problem for the Australian dollar. So just something to be aware of. Maybe another reason why, we think that maybe Kiwi is a better play here than the Australian dollar. If you're, picking a commodity currency to play dollar weakness against. All right, let's go to crude oil. So crude, I was looking for more like more below 65 for some resistance, and that may very well still happen. I don't really have anything here where we've bounced from, so I am looking for 65 or more specifically this magenta line before we see any sort of strong, strong bounce. Again, this is back from the 2016 low, but January, as I've explained a lot. Where are we at right now? We are on the median line, testing it, underside, could see resistance here. It's not all that clean. You've had periods where you've gone plenty above it, right? You can see here, for example, if we want to draw another parallel, let's see if we can get a parallel here. Hold on. Let's see what that is, 24 degrees. So let's get this one on there because I'm actually thinking that maybe so that could be one up here. That'd be a pretty big move up about 70 bucks. Let's see what the 618 of this is. It would be 70.19. So maybe that's where we're headed. We're at the 38.2 now in the median line. I'd say this is kind of your first test, but maybe your more important one is up here. About 70.19 or so, right? That might be an area to consider for downside in crude oil again, right? And getting a recovery high of sorts. So you do have some good pivots off of this red line, including support back in January before a breakdown, and then of course resistance on the 26th of March. Okay, so we'll see here. Expect some sort of reaction here in the near term. I mean, this is a spot, so I wouldn't act like you're going straight to 70. But for me, those are the two places to at least trade crude. Up here, 70, 19 or so. Down here on the pink line, it's about 64.50, depending on when or if you get there. All right. Let's look at gold and silver. Spoiler alert, they are not doing a whole lot at this point. Right, we have gold here, and it's still struggling on the channel, the 2-4 line. This was last week when we got up there. It's a good sign, at least, that we've turned up a little bit, right, after pulling back from it, because the more, you wouldn't want to see, this and then just dribbling lower. So we at least have, some sort of a bid, it seems, under price even within the channel. Obviously, you do have to get out of this channel, right? This short-term channel before, we can even think about, something bigger on the upside. So that is, to me, this is, I still like it. I'm still constructive on gold. I think that you did complete a flat pattern, right? A, B, and then the C wave down with 1, 2, 3, 4, 5. And I'm thinking you're trying to base in a little 1, 2 here or something like that. Gold is actually holding up a lot better today. Gold's actually up, not quite $2, but it is up a little bit. Since, say, the Japanese yen is actually pulling off a little bit, right? Dollar yen's actually up a little bit. So maybe we are going to get gold to finally get out of this channel, but simply that's all there is to it. We have to wait and see if we get up out of here. Silver, I mean, what do you want? I mean, it's still just completely insanely frightening quiet in the silver market. I mean, just so quiet. It's crazy. It is insanely quiet. If you ever look at Bollinger Band width, I saw a tweet from a very well-known kind of financial, writer guy the other day that Bollinger Band width was the lowest since 1999 in gold. Well, you should look at silver. My goodness, silver is just out of this world tight in terms of its range. Going to the daily chart, it's still this 200-day average. I mean, every time we're there, it seems to reject. Let's see if we can get up there, right? It's, basically 1680, more or less the high that you have on 511. Yeah, and looking for silver to get up and out and do something. All right, so there is absolutely nothing else to add about silver. It's just, you can't really analyze a market that is not doing anything. Let's look at Bitcoin. Thought that would be interesting. And then we'll take a quick look at the S&P, and then really that's all I've got. So I do have Bitcoin at a very important level. If you go back to the 2012 or 11 low, excuse me, and you draw in a simply a channel with with the 2015 August low and the November 2013 high, you can see that we are actually at the center of that entire channel, and this is a weekly chart. You can see the price has been bouncing along that center channel line since February. So February low, you have lows here in March and April, and then now you have the end of May, and you've got the 52-week average. So point being, it's a big spot for Bitcoin, and I do think it probably tries to bounce here. If it does, if we get through this, then your magenta line, which is was former resistance on the way up, that's going to be your next level, and that's not until you're going another 50% lower. So with Bitcoin, I do think it does try to bounce here. You at least have a clean, call it a clean reference point or stop level or something. But yeah, I am looking for Bitcoin to get a bounce from here based on the long-term chart. I don't have much on the really short-term chart. You could have a triangle here, right? You could have an A, a B, a C, a D, get a bounce in E, and then we spill lower, right? So this could be all big A, big B, and then lower in big C. Let's go to an hourly chart. Hourly chart, you can see the test of the 200-hour average. So you are coming into an area where, it's a test. I mean, that's just this morning, and you need to get up through this before you probably want to actually be long. And then for me, folks, we're going to look at the S&P and then I'll take some questions if there are any, but that's kind of I went through my agenda, everything that I wanted to look at here today so far. All right, let's look at the S&P. All right, so here's your long-term chart. We've been in a really tight consolidation since May 14th. So, halfway through the back half of May, it's been a pretty tight range. And that remains the case. So got a couple things here. One, the long-term channel, we are looking at resistance on the long-term magenta line. Okay, that line, remember back in mid-May, we were hoping we'd get there then, never happened. I still don't know if you're going to get there or not. But essentially the same levels we've talked about for a very long time have been 2682 and 2759. Well, you got 674 yesterday, closed above the level, of course, but you can see the level I'm talking about, why it's important, 2680s and then 2750s. So you have a lot of inflection points at that price, or at those two prices, since January started, so since 2018 started, right? If we zoom into an hourly chart on the S&P, nearing that 200-hour average, and simply here, we're going to make this real simple, but the setup here is that whatever just happened yesterday and today is a false break to the downside, and that you're going to go to try to run for this area up here, and that your setup is to look for support at, say, 2700 to 2704. Those are the range lows, right? Former range lows back here. Okay, so this is your support over the next couple of days. Need to hold that in order to, want to be long. I mean, for the setup for me would be to buy a dip into this level, okay, and then look up towards 2759, and then I'd probably be out. So that is it for S&Ps. If you're looking for something a little more longer term, then we're probably, best bet here is probably sitting maybe on the sideline until up here, and then looking for a short. Again, the importance of this level of the magenta parallel, you can see it, right? As we scroll back, you can see the resistance and supports and everything that we've had around this line, really over the last, almost decade. Pretty long time, right? Okay, so that is it for me today. Are there any? Be happy to answer any questions if you guys have them. Going once, going twice, and sold. All right, so that's it then for today. Thank you everybody so much for your attendance and for your time. And we'll get going, get this up and archived for you. Have a great rest of your week. Remember, we're broadly thinking dollar lower, and probably be looking for a buy in euro after today's session. We'll be plotting an entry of sorts and probably a dollar CAD short as well, right? So we have it there with dollar yen. We have it there with Kiwi, but those are the next two I think on my list to enter into. All right. Take care. Again, have a great rest of your week, and thank you.